Hi and welcome to another episode of Dividends Daily. This channel is all about my journey into growing a portfolio of stocks that pay me dividends on Revolut app. And dividends to me is the first time I realized that passive income is a real thing after all. As of this moment, my portfolio is generating something above $30 a month just for holding the stocks that make the portfolio. That income was less than $1 the first month I started, and I'm looking forward for it to reach $60, $90, $100, etc. per month a few years ahead. This has nothing to do with get-rich-quick recipes, and I doubt that such recipes exist. It will take time means more experience, and experience means better choices. Before we jump into the portfolio updates, click the subscribe button if you haven't already, as my mood for making new videos is directly linked to that. In this episode, I will as always show you my current portfolio value, new Revolut trading fees and how does that affect my investing plan, dividends received so far after episode 6, I will show you the companies I'm holding that have their ex-dividend dates on week 16, and also stocks I bought or sold after the last video. What has changed on the app is that now the holdings are listed based on their value from biggest to smallest instead of alphabetical. Still, no option to filter as we wish. Let's start with the portfolio value update. At this moment of the recording, the 11th of April 2021, it sits at $11,933, out of which 22.44% is unrealized gains at $2,187. And now, let's have a look at the updated fees from Revolut. The email sent by Revolut on the 18th of February stated, "We've been working hard to improve your Revolut experience and have made some updates to our features. As a result, we've also made some changes to our terms and conditions that we'd like to share with you. Trading changes will take effect on March 1st, 2021, while ATM and international money transfer changes will take effect on April 23rd of 2021. And then moving to trading, we are restructuring trading allowances and pricing as follows. Standard users will receive 1 commission-free trade per month, previously it was 3. Plus users will continue to receive 3 commission-free trades per month. Premium users will receive 5 commission-free trades per month, it was previously 8. And metal users will continue to receive unlimited commission-free trading. I have been a metal user from a very early stage of my journey, so I'm not affected by the transaction limit changes. Lastly, the custody fee will change from 1 basis point, 0.01% of asset value per annum, to 12 basis points, 0.12% of asset value per annum. I will show you shortly how this change affects my portfolio with the actual numbers. So what this basically tells us is that all plans except Plus and Metal now get less free trades per month, and that the custody fee went up 12 times. So I have now included the custody fee into the spreadsheet, and the amount will be subtracted every month from the total dividends received. You can see that for a portfolio of around $11,000, the custody fee in March was 0.09 cents, and now with the increased fee in April, it went up to $1.14. If we were to multiply that with 12, that equals to $13.68 paid in custody fee in a year, given that the portfolio size remains the same. A few words about my view on the updated fees. Revolut as a company has to be profitable in order to continue offering what they offer, and they offer more than just fractional trading. The most proven way to profits nowadays is through subscription plans, and that's exactly what Revolut wants to do with the new fees. It wants to push users towards their paid plans. What I don't like is the short notice from Revolut, as they inform users about the fee changes only a few days before they would be in action. Quite a hard way to push people to either upgrade to paid plans or start selling to close their accounts, which again, if you were a free user, it would cost you a significant amount if you had to do many transactions to sell everything. To conclude, I am willing to pay the increased custody fee to keep my portfolio and stay invested with Revolut, just because I believe that if you invest properly, there is way more money to be gained compared to the fees paid to keep doing it. In the end of the day, we are always free to invest on any other trading platform as long as it better suits our needs. In this screen you can see the companies that have paid me dividends and the amounts for each one. So in the first 11 days of April I have received a total of $19.73 in dividends, which minus the custody fee leaves me with 18.59 cents so far. I need $10 more and my total income for 2021 will reach the total dividends made in 2020, which is impressive. Let me now show you two graphs that help me visualize the progress made so far. In the first one, I am able to directly compare dividends made in different years. The blue bars are for 2020 and the red bars are for 2021. You can see the first possible comparison from the first 57 cents made in April 2020 versus the $18.59 made so far for April 2021. I'm excited to see how will December look at the year's end. Stay tuned. In the next graph, quite simple, it shows month after month in a straight line, so you can see how the income steadily grows. Biggest amount made so far was March 2021 at $33.27. In this list you can see the companies I'm holding that will have their ex-dividend dates on week 16. That means that if I want to grow my dividend income in one of these companies for the next time they pay it out, I should add more shares before the X date. If I add shares on the X date, I will not qualify for their dividends in this payout. But in the one after, that means 3 months later for quarterly payers, given that I don't sell their shares until the next ex-dividend date. Here is a quick update on the transactions I've made since the last episode. On the 5th of April, I sold my complete position in Disney with a small profit of $9.58. Now the only reason for that move is that I want this portfolio to be a 100% dividend growth portfolio, and Disney at the moment does not pay any dividend, and basically that's the only reason. I even think that Disney stock will do great in the future with Disney Plus and all the parks reopening. I might reconsider if they start paying dividends again. I added $155 to increase the small position I had in NetApp, and that bought me 2 more shares. NetApp had its ex-date on the 8th of April with a yield of 2.6%, and Revolut will pay out the dividend on the 29th of April. On the 9th of April, I added 2 new positions. I added $100 to Kellogg, that bought me 1.6 shares at $62 a share. Kellogg has a dividend yield of 3.6%, and they have been increasing their dividend for more than 16 years in a row. Kellogg will have their ex-dividend date way ahead on the 13th of June. The second company I added was Huntington Bancshares. $100 bought me 6.18 shares at $16.17 a share. They have been increasing their dividend for 10 years in a row. Their current yield is 3.69%, and their ex-date also very far ahead on the 20th of June. The last move was to increase my position in Citizens Financial Group. Their current yield is at 3.44%, and their ex-date coming up on the 19th of April. They have been increasing their yield for 6 years in a row. That was all for now. Until the next time, remember to stay positive and never compare your progress to others. Bye.